Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having an absolutely fantastically wonderfully incredible day. This news is just out there, so without further ado, boys and girls, let's jump right into it. The price of Bitcoin abruptly fell from 11,800 to around 11,100 US dollars in the last 48 hours. While on a macro level, the digital asset remains in an uptrend, there appears to be three factors behind Bitcoin's pullback. It's actually four, if not five, and one of them seems to be the most likely. The presence of a crucial resistance level at 12,000, several whales taking profit, and the retest of a major support area are likely what catalyzed the drop since the first week of August. Bitcoin has attempted to breach the $11,800 to $12,500 resistance level. Every one of the 5 attempts to surge past 12,500 has failed. One potential reason is that 12,000 is such an historically high resistance level, yada yada. I don't believe any of that crap. There's a little chart right there, absolutely wonderful. A pseudonymous trainer known as Don Alt said while Bitcoin can rebound, bears have an easier invalidation than before. May find temporary relief here, but still looks pretty heavy. Bears have an easier invalidation now that they had before. If price takes out 11,760 on a closing basis, Bitcoin is probably going higher. Until it does, I'll assume it goes lower. Wow. So if Bitcoin goes higher, it's going to go higher. If Bitcoin goes low, I'll assume it's going lower. Absolutely wonderful. Here's one of the other highly publicized reasons as to why the price of the wider cryptocurrency market went down. It says ever since the price of Bitcoin surpassed 10,000, it remained above 10,000 to 10,500. Given that the 10,000 level has become a significant level of support, on-chain analyst Willy Woo pointed out that a drop to 10,900 could lead to a CME Gap fill, which is currently at 9,700 US dollars. He said, the channel we are in is now being tested. I don't think it will hold. It usually doesn't do price targets and on-chain directionally, but here's my critical level support TA, BT dubs. If 10,900 level fails, the lower 9,700 level would fill the CME gap. So apparently also something that seems likely, but I usually don't believe it, is the idea that the price of Bitcoin, our decentralized asset, for some reason has to fill in the price for a US-based US dollar market that says that Bitcoin's price should be valued lower, and therefore Bitcoin has to fill that gap, even if it means crashing by a good $2,000 to $3,000 just to fill that gap for, once again, dollar settled Bitcoin futures. Also doesn't seem too believable, and apparently whales selling, taking pressure, profit. This one seems a lot more likely because it's now, we have invited, and they've been here for a while, very big major players from the previous financial world are now into the cryptocurrency space, and it could be that they're simply trying to slam the price down in order to make future profits in the future. This one says right here, Bitcoin price falls to 11,300. What to expect? Nobody knows. That's why there's a question mark. What seems the most likely to me, and I don't think it's a tinfoil hat moment, I'll put it on one of my ears as a maybe just in case. It says on Tuesday, Bitcoin, and to an even greater extent, many altcoins are under pressure due to the uncertainty over the Federal Reserve's chair, Jerome Powell's speech, which is going to happen on Thursday at this year's virtual Jackson Hole Economic Symposium. This annual symposium, which is sponsored by the Fed of Kansas, has been held in Jackson Hole, Wyoming since 1981, but due to 19, it's going to be virtual. Got it. According to a report by CNBC, Powell is likely to detail a set of measures aimed at, here we go. Here's where it gets very, very interesting. According to the report by CNBC, Powell is likely to detail a set of measures aimed at pushing inflation higher. You heard what you heard, but higher to a healthy level during a speech titled Monetary Policy Framework Review. In case you are wondering why the Fed might be aiming to make inflation higher, here's the explanation from CNBC. They said, while the average consumer might find it absurd to want to raise the cost of living, because it kind of is, central bankers and economists see too little inflation as a problem. For those of you who don't know, inflation is a problem for the people at the top. They make their money by, and inflation is very bad. Deflation is bad for the state. Deflation is bad, is great for the people. When there's deflation happening, your money is worth more than it previously was the year before. However, this does not bode well for governments who are trying to consistently have a higher GDP year on year, and this only happens when you initiate inflation. So inflation's good for them, but it's bad for your wallet. Deflation's terrible for them because governments want to have a consistent GDP going up every single year. It shows how rich your country is and how much richer it is than the year before. However, deflation is absolutely wonderful for you because that dollar you had in your bank the following day is worth more than it was the previous day because of deflation. They said it often reflects a slow-moving economy, with a low standard of living. That's also false. On top of that, the accompanying low interest rates give policymakers little wiggle room when crises happen, and there's a need to loosen policy. So, I saw this news, and I scratched me head, and then I was like, oh, maybe that's it. What I think is happening, because there are so many former players from the institutional finance world, whatever word you want to throw at them, it may be that Bitcoin's price fell in anticipation of some type of an announcement that the Fed is going to continue pushing up inflation even higher, which is usually a good symbol for Bitcoin. This is why I said the tinfoil hat, half of it's on my ear right now. It's not completely on my head, but this has also happened before in the stock market many other times. If people were expecting the Fed or anybody else to raise or lower interest rates, the market would pre-react to what people already knew or assumed was going to happen. It would take a dip, and then when they heard what they knew that they were already going to hear, prices would then shoot up, and it was kind of a way for people to lower the prices of things on the market so that it was easier for them to kind of get back in at a lower price. And then when the news came out, I mean, the correlation, if there is a correlation that we've seen or have spoken about over the last couple of weeks that a lot of analysts have come forward to tell us about, is that every single time that we got news or some type of negative news that the US dollar was inflating or some other economy was doing really bad, but usually focused around the US, Bitcoin's price was jumping higher and higher. So I can only assume, first of all, we have news that the Fed is planning on unlimited quantitative easing for the very foreseeable future until 19, I assume, is no longer a thing. Air quotes, which means they're going to be doing this for a while. I've seen news articles. I myself am not in the States. Please tell me if this is actually a thing. I keep seeing things on CNBC and all these other places when I watch their news online. That apparently like food in the States is becoming quite expensive. People were saying that milk before was like $2.99. Now it's like $4.79 at certain supermarkets, and things continue rising in price. And it's just very weird that this is happening because people also, don't have jobs and the money's kind of tight, but stuff keeps getting more expensive as their money's valued less. So are we on the cusp of some type of inflationary measure? Because normally the normal inflation levels are said to be, or they aim for 1% to 2% per year. I think the last couple of years, I think that the US's inflation rate was anywhere between 3 to 4%. This is what I think I read. I saw a chart somewhere, something like that. They've printed $7 trillion since February, March. And normally I think a trillion or so is printed year on year, give or take. If they announce that they're going to be printing even more, to make the probably they're probably just trying to make the economy look like it's doing well. And if you have your GDP go up at the end of the year because you've been forcing money into them, I guess I think I got it. But it's the same exact thing that we were talking about, that the US's GDP fell dramatically during the second quarter. The UK's GDP fell by, 41% over the second quarter as well. Like, we are in like depressionary numbers, like not even like a mild recession. Like, we are in, oh my gosh, like the world is burning kind of monetary situations right now. So the only thing that really I could kind of piece together in my head, and please tell me your own theories as well, is that I don't believe that Bitcoin dropped because of a CME gap. I think all the other times that we've heard that news before, it's just simply people who know how to move the market up and down. Because the moment whenever we did get news that Bitcoin had filled any type of CME gap, Bitcoin's price rose the very next day. And we didn't hear any more news about that for quite some time. It would be fascinating if on Thursday Bitcoin's price actually shoots up after this speech ends up happening. Anyway, enough time on that. This was, of course, the top news. Why did Bitcoin fall? We've recovered a bit already. Bitcoin's at 11,350, give or take. We dropped to around 11,100. So, what have you. Anyway, that's all the Bitcoin and I guess wider cryptocurrency price news. And I guess we'll see tomorrow what's going to happen. I mean, I don't assume that they're going to announce that they're going to stop pushing money into the markets to keep things afloat. So I guess we're going to have an inflation conversation on Friday morning between us. All right, let's move on. Next up. The total value of capital locked in decentralized finance protocols has increased by 271% in the last 2 months alone, surpassing $7 billion for the first time. If the current rate of DeFi continues, DeFi growth, it'll be worth more than $27 billion by the end of this year. Aave currently comprises the largest DeFi project with 1.5 billion, followed by MakerDAO with 1.42 billion. Curve has 1.1 billion. Yearn has 845 million. Synthetics has 801 million, and Compound has $797 million. Absolutely wonderful. It says, however, while DeFi's aggressive growth trajectory has been fueled by recent rise of lending protocols, just six protocols represent more than 90% of the locked capital in the sector, according to DeFi Pulse. I think there was a little chart somewhere around here. Is there a chart? Nope, there's no chart. Somebody said, I don't know this guy, Leshner. He said, if Spaghetti Money has $500 million in less than 36 hours after launch, the industry needs to self-regulate and stop launching these meme farming games. Remember, we were just talking about Spaghetti? The coin was called Pasta, and apparently they had even more money. They had $500 million locked into their protocol in 36 hours. Same exact thing with Yam, who had 400 million, and then they fell apart. And then now there's like a Yam 2.0, apparently, according to... Oh boy. So this is not going to stop. It's only going to continue. A lot of people in the industry, and I'm not knocking your hustle, as it were, don't care about decentralized anything. They're just in it for the profit. They don't care about the future of decentralized money in a world where people have complete control over their finances. Is just about how much money they can make right now. So these are going to continue happening. I have seen over the last 3 days, I don't have them in this video, an enormous amount of, articles that have the word DeFi in the same exact sentence as SEC. I'm seeing it a lot popping up. There was also something earlier with the letters IRS were also in the same exact paragraph as DeFi. A lot of people are in that mode where they think they can keep going on forever and doing all these things, and that is not how it's going to play out. If you haven't learned anything from 2017, if you bake up, I mean, no analogies even needed. They're realizing that people are making tons of money from these things, and you know who wants their 38% of the pie. So I don't even know where to end this story. $7 billion is a huge amount of money. The DeFi craze really hasn't started until around like February, March. That's when it got really insane. And I guess we can have the discussion of like the centralization inside of all this, but no one would really actually care because everyone's just trying to make as much money as possible. Because, logic. Also in the news, Polkadot, or DOT, the native token of the interoperable blockchain network Polkadot, has bulldozed its way into the top 10 coins by market cap. The token, which underwent a referendum-mandated 100x redenomination on the 21st of August, occupies the 7th spot at the time of writing, sandwiched between Bcash and Litecoin. It says, unlike Bcash and Litecoin, the value of DOT has been steadily rising over the past week and has in fact surged by 18% in the past 24 hours. Curiously, CoinGecko appears to be the only major tracking platform recording the full circulating supply of DOTs. CoinMarketCap has not yet listed DOT. They have though, with some users suggesting that vested interests are to blame. CoinMarketCap was acquired by Binance earlier this year. Stop the nonsense. Shut up. The news is all over the place that apparently Polkadot is in the top 7, but it's not on any cryptocurrency exchange. I found Polkadot on CoinMarketCap. It's coin number 2167. Same exact thing on the other price website. Maybe in the next couple of hours, things will be updated and DOT will appear a lot higher, but all the ranking websites show it's not even in the top 50 or the top 100. It's ranked 2167. It's definitely on their website. I don't know what this Binance hate is, or assuming Binance has listed Polkadot. So what's the point of being like, there's seems to be vested interest? Yeah, they're interested in making money. They've listed the coin on their freaking platform. These articles are ridiculous. The point is, the news all over the place is that Polkadot has slammed its way into the top 10. Assumption that this is probably just a huge amount of hype. A lot of articles are popping up talking about that Polkadot is the new Ethereum. We're having that same discussion once again. If in 2 months Polkadot is still wedged between the 6th or 7th position, or if not has risen to the number 3rd, 4th, or 5th coin, then we'll discuss this once again. But whenever a new coin kind of pops up, they kind of, move up in the rankings and then tend to slide down. Polkadot has been hyped for a number of years now. I think it took them 3 years to launch this project. It could simply be that behind the scenes, they created something. They got a lot of support from the cryptocurrency exchanges, and now the cryptocurrency exchanges are going to make sure that they remain higher in rankings. I honestly do not know. The point is, yeah, on any cryptocurrency ranking, there's no Polkadot within the top 50. But the news was kind of everywhere that they did it. Anyway, that's the Polkadot news. We'll see what happens. This is not the first coin that is there to eliminate Ethereum. And with that, which I also don't assume is going to happen. Listen and understand. If these major companies and corporations and cryptocurrency exchanges do have their weight behind Polkadot, they have an entire mountain behind Ethereum. Never forget, a lot of the people who are in the cryptocurrency space who have been here for a while all accumulated Ether when it was $1. They have an enormous amount of Ether, and they're also usually a part of the Enterprise Ethereum Alliance. It seems more likely that they would continue putting all their weight behind Ethereum And they would drag along Polkadot as well so that they can continue to also make money. But I don't see any. No. So anyway, that's the Polkadot news for what it's worth. It even says it here. This page refers to the new DOT, which is 100 times smaller than DOT on 21st of August. The DOT token underwent a redenomination for its original sale. Is it called new DOT? Are 100 times smaller than DOT old. There is no difference between new DOT and DOT except for their denomination. All right, let's move on. I don't even have time to dissect that. Also in what news? The average daily transfer value for Tether, listen to this one, has surpassed that of Bitcoin and PayPal. A report by Coinmetrics has revealed that Tether's 7-day average adjusted transfer value reached over $3.55 billion on the 20th of August. This is around 20% more than Bitcoin, which was around $2.94 billion. And there's a little crazy chart right there. Following 6 months of rapid growth, Tether's average daily transfer value has finally flipped Bitcoin as it continues to take more and more of the market share of on-chain transfers. The recent surge in Tether usage has been driven by DeFi and token swapping protocols such as Uniswap. Economist John Paul Koenig also observed that according to PayPal's Q2 report, the daily average transfer value of the online payments giant was less than Tether's at $2.94 billion. Tether's now what I just don't. I think it's just the curse of 2020. Tether's now doing more daily transaction value than PayPal and Bitcoin. We knew from last year that Bitcoin was already doing more than PayPal. When we had that news, I think it did like a 1 point something trillion dollars in value Bitcoin last year, and I think PayPal did, it was like 800 or 700 billion or somewhere around that number. But apparently Tether is now the king daily coin transaction. I don't know, man. This whole year's just been weird, like just completely nonstop. And I assume this Tether growth chart is not going to be stopping anytime soon, just like really because of logic. Tether keeps putting their coin on different blockchains. It's being used like it's the number one stable coin. I was going to say for a reason, but it's kind of more so. I think it just kind of has the name at this point. It's being spread across the entire cryptocurrency space, and people are using it because it has the most liquidity. The other stable coins that we have just never have really gotten there, like the Gemini coin, the Coinbase coin, the Paxos, Polkadot, and all these other coins. I don't think they're ever going to get there. I mean, I think they'll still be around, but it's just something about Tether that really captures the imagination of cryptocurrency traders all over the place. So yeah, Tether's mind blown, like completely, and I guess absurdly as well. Maybe Bitcoin will probably overtake it again if we can shoot back up in value and people are transacting exclusively in Bitcoin. Maybe, who knows? I don't knows. Anyway, that's the Tether news. Let's move on. Next up, the trillion-dollar asset manager Fidelity is scrutinizing a popular and controversial Bitcoin price model. A recent report from Fidelity has analyzed the stock-to-flow ratio, which divides the amount of a commodity in circulation by the amount created per year. So it's what's already circulating and then what gets created per year. Using the correlation between an asset's price and its stock to flow, the crypto trader Plan B has predicted that Bitcoin's value will soar to $1 million in 2029. Now, understand why Fidelity is scrutinizing this. If you have an asset that it was at the beginning of this year or fell down to 3,500, is currently around 11,000, and someone is saying in 8.5 years will be $1 million, you're going to scrutinize it. Can you imagine buying a house for $11,100 right now. And in 8 years, it is worth $1 million. Now imagine putting 100K into Bitcoin right now and you have 10 Bitcoin. And in 8.5 years, you've made $10 million. Those returns are obscene. Although there is a fierce debate on whether the stock-to-flow ratio is an accurate way to forecast Bitcoin's trajectory, Fidelity says the model is a credible tool for analyzing scarce assets. The firm says, historically, the metric is a sound way to judge whether a given commodity will become a successful store of value. They said, and I do quote, commodities with a stock that is difficult to double due to a low rate of production relative to existing supply have historically served as a superior store of value. Once again, Fidelity said that. Such commodities are largely used for investment purposes and occasionally industrial uses. On the other hand, consumable commodities that are susceptible to large increases in supply are less effective in storing value. The main reason why Bitcoin continues to be and will continue to be the main focus of many institutions is because of the halving. I don't know if you know that. I don't know if it's your first time hearing this or if I'm giving you some type of brand new news. It is because Bitcoin is already rare. The rich people are pricing in or starting to price in the fact that there are at least 4 to 6 million Bitcoin that are lost and gone forever. People threw away their computers, what have you. And the entire idea that every 4 years, the current made supply of Bitcoin is going to be cut in half while they continue to consume and absorb all the Bitcoin there is a very the investment model for that is insane. Can you imagine if apples are growing on a tree and every year there's half as many apples? This is also a world where the apples don't decay and everyone in the world loves apples. Next 4 years, there's half apples. So we get to the point, every tree has one apple. And we have to start slicing that apple into little pieces so that everyone can have some, but everyone is getting a sliver of an apple. And there are going to be rich people who have 38,000 apples in their warehouse. It's very attractive as an investment tool. They said in the Bitcoin standard, Safety and Amos adopted stock-to-flow to compare Bitcoin to commodities used for investment and consumption, and the use of the metric has since expanded and given rise to models based on the ratio. Gold, the most resilient store of value through the ages, has the highest stock-to-flow ratio, followed by Bitcoin today and silver. Following the recent halving, the gap between gold and Bitcoin's ratio compressed. Bitcoin's stock-to-flow ratio will eclipse that of gold following the next halving in 2024. There's a chart right there for Bitcoin in 2025 compared to gold, Bitcoin next year, Bitcoin this year, Bitcoin last year, silver, palladium, and platinum. Grayscale echoed Fidelity's assessment that commodities with high stock-to-flow ratios are typically sought after by investors. The investment giant looks at Bitcoin to illustrate the positive correlation between an asset's price and its stock-to-flow ratio. I ask you, just take time out of your day to wonder why all these... listen. All the banks have done it. I'm sure all the banks have done it, not just the ones that we heard about. All the major institutions are doing it. I'm pretty sure that the NASDAQ and the New York Stock Exchange also did it years ago as well. And now we have Fidelity also looking at the stock-to-flow ratio, talking about that Bitcoin stock-to-flow will eclipse gold by 2024. Can you imagine what will happen by 2028 or by 2032? I always want everyone to really no regrets is what I say. I give you the information. I try to let you understand that all the major players are really in this space and they're assessing how high these charts are going to go. I just want to make sure that by the year 2032, no regrets. That if you haven't been buying Bitcoin and you're not into Bitcoin and you hate Bitcoin because it's too slow, I just want you to really know that you had all the information available to you to make a proper decision as to why you did not buy Bitcoin. It's going to be huge. It already is huge. I don't know what more I can say on that. So we're just going to slide on along. And to finish things off, also for some reason in like hyper, also mega popular news, Coinbase has appointed Marcus Hughes as the new general manager overseeing its European operations, they announced yesterday. Hughes served as a general counsel for Coinbase's international operations for the past 2 years. Prior to his time at Coinbase, Hughes spent nearly a decade at Morgan Stanley. That makes a lot of sense, where he was an executive director in its legal and compliance division. According to the announcement, Hughes will now be responsible for scaling operations across Europe, as well as bringing to market the products and features that our customers want. Last year, the exchange launched Coinbase's Card, a Visa debit card that enables customers in the UK and 26 European countries to spend crypto as they would money from traditional bank accounts. What does that have to do with Marcus Hughes? Is it because he's going to Europe and there's a European Coinbase card? Okay, so like I said, this was very popular. I don't know why. I mean, to be fair, I guess maybe it's because he's from Morgan Stanley. But we also, what was the news we had yesterday? It was like Binance hired someone, and that also made popular news. And then the day before that, Ripple hired someone that was also. Do people like hiring news? I'm not understanding why this is always like really popular news in the cryptocurrency space. Like they're going to continue hiring people. Like imagine the news if Coinbase just stopped hiring people or appointing people to new positions. I don't know. It's tickling someone's fancy because this news is always in the news every single day. Alrighty. As always, a very special thank you to my Patreon supporters: Professor Wally from Gunbot University, Snacky Chan, Auspicious Agile and Blockchain, Decentralized Peter, Navarro Williams, David James, Attila the Han, Yasha Harari, Oscar Maldonado, I said Mosca Mabanabo, Utopia 569, Moonman High, XRP, Joshua Vineyard, Martin Stoyer, Nostromo, John Sarson, The Animal Reader, A Bibliophobia, Todd Mullis, Adam Graysick, Moore Maroney, Master Ventures in Thailand, Jared Schneider, Wise Knight Owl, 242 to the World, Crypto Joe, Bankroll Network, Crypto Artist, Cold E3D, Damian Setsuna, Nick Kanaya, Richie Rich III, Vlad the Impaler, Paxis, Nick Mangia Lavori, Anthony Charles, Jim Garner, Jeremy Fox, Minting Coins, Miller Hitch Test Every Day, and Kyle Skips Leg Day. Yes to Crypto, Bodie McBoatface, Anytime Fitness, Monk's Corner Staff, ArfMedic17, Bake Me a Cake, Tigger Macho Nisa, On Crypto with Lionel, Crayla Michelle, URL, and Bolero Bastos. Almost broke my phone. Thank you all very, very much for your support. Thank you to everyone who is a member of the channel. Thank you to everyone who is a clicker of affiliate links. And thank you to everyone for watching, especially if you've been here for this long. I know many people click away. I've noticed people click away whenever I say the word Ripple. Not joking. People will leave the channel. And also, there's another thing that I say. I don't remember what it is, but I noticed the clicking rate drops at the moment. What's wrong with my voice? At the moment, geez Louise, Bitcoin's price is at $367 US, 11,367. Is down 1.6%. All the other coins are down. Tether's green because it's Tether. Any other crazy anomalies? Cosmos is up. OKB is up. Aave is up by 21% because why not nowadays? Yeah, the water market's in red. Except for something called Kusama, which is up by 24%. Because why not nowadays? It just seems about right. Jeez Louise, I'm sorry. I have no idea what's going on. I guess we'll see by the end of tomorrow if the market's going to start going back up after this Chair Powell speech that's going to happen. I feel like he's probably going to announce that they're going to initiate some type of inflationary continuation of it measure. I don't assume they're going to be like, oh no, actually, we care about the people now, and we're definitely going to make sure that their money's worth more, because that just doesn't seem like it's going to happen to me. Anyway, I do hope you all enjoyed. Hope you all are having a great day, a great morning, a great afternoon, a great evening, wherever you are, wherever you might be. I do hope that it is absolutely fantastic. Thank you all once again for watching and or listening. And I will most certainly be talking to you all soon. See you.